Airbnb benefits when most property owners fail. Most people assume Airbnb wins when property owners make good money. That successful owners mean a stronger platform. That assumption is wrong. Airbnb's business model does not depend on successful property owners. It depends on replaceable ones. An owner who carefully calculates real costs, raises prices, limits availability, and learns how to bring guests directly is not an ideal partner for Airbnb. Airbnb benefits when most property owners never reach stable profitability. The platform does not build its economy around experienced, profitable landlords. It builds it around a constant inflow of new people who do not yet understand the real numbers. A new owner usually sees Airbnb as extra income. They look at the average nightly rate, multiply it by the number of days in a month, and assume the business is already working. What they don't factor in are vacancies, wear and tear, repairs, taxes, cleaning, platform fees, regulatory risk, and time. But Airbnb does not earn its commission from the owner's profit. It earns from every booking. If the price is lower but bookings are higher, the platform still wins, even when the owner is effectively operating at a loss. That's why the first months on Airbnb often feel like success. The property books frequently, the calendar looks full, the algorithm pushes demand, and the owner feels everything is going in the right direction. In reality, this is the phase where the system works against them. Costs accumulate slowly, while income feels fast. Airbnb gets paid immediately. The owner does the math later. Over time, some people realize their real returns are lower than expected. They raise prices, limit availability, refuse short stays, or leave the platform altogether. For Airbnb, this is not a problem. Their place is taken by new owners with new illusions. The system does not need long-term participants. It needs constant rotation. An experienced owner resists algorithms, rejects recommended pricing, and tries to escape platform control. A new owner does the opposite. They follow prompts, accept default settings, and compete on price. From Airbnb's perspective, this is ideal behavior. That's why the high percentage of people who rent out their property for only a few months or a year is not a system failure. It is the system functioning as designed. Airbnb does not optimize for individual success. It optimizes for constant renewal of expectations. When expectations collide with reality, replacement begins. The platform remains. The people change. The first thing to understand is this. Airbnb doesn't make money when a property owner gets paid. It makes money much earlier, before a booking even happens. The platform profits from the moment someone decides to list their property, long before it's clear whether that decision will actually be financially sound. Once an owner signs up, uploads photos, sets a price, and opens their calendar, they've already entered a system where the core economics are built around process, not outcomes. Airbnb doesn't need a property to stay on the platform for years. It needs it to appear at the peak moment of optimism. That's when owners are most likely to accept lower prices, flexible terms, and short stays. This creates the illusion of a highly active market and pushes down the average nightly rate in a city, making the platform more attractive to guests. When enough new owners enter at once, Airbnb looks efficient and affordable, even if many of them never reach real profitability. The second thing almost no one notices is that Airbnb has no incentive for people to calculate carefully. The system nudges users towards simplified decisions. It shows the average nightly rate, but not the average annual return. It shows a full calendar, but not long-term wear and tear. It rewards activity, not responsibility. The result is a market where financial risk is spread across thousands of individuals, while revenue is concentrated in one place. And the third, least obvious point? Airbnb isn't afraid of disappointment. It relies on it. Every disillusioned owner creates space for a new participant with fresh expectations. The system doesn't break when an owner leaves. It refreshes. And the faster this replacement cycle happens, the more stable the platform appears from the outside. That's why Airbnb can show growth for years, even when, at the individual level, the business looks unstable or unprofitable. The middle class is where Airbnb's model works most effectively, and at the same time, most destructively. Not for wealthy investors, and not for people without property, but for those who own one or two apartments, have a mortgage, a job, and a desire to slightly improve their financial situation. These are the people who most often see Airbnb as a reasonable compromise between risk and income. They don't enter the platform as business operators. They enter as individuals who simply want their property to work for them. But the system is built in a way where risk accumulates slowly and almost invisibly. There is one thing Airbnb sells better than housing, and it's the reason people underestimate that risk. Airbnb sells a sense of control. The platform's interface is designed to make property owners feel like they're always in charge. You can change the price at any moment, close the calendar, limit minimum stays, or cancel bookings. All of this looks like flexibility. But flexibility is not the same as control. Real control is the ability to predict outcomes. Airbnb doesn't provide that. It provides the ability to constantly react after the fact. People see motion, buttons, settings, adjustments, and confuse activity with management. This is a subtle psychological effect. When it feels like you can intervene at any time, risk appears smaller than it actually is. That's why people are more willing to accept decisions that would otherwise feel too dangerous. Airbnb doesn't force anyone into short-term rentals. It simply makes that option psychologically comfortable. There is no quiet space in the app to calmly calculate long-term consequences. Instead, there is constant movement, prompts, recommendations, and demand signals. This creates the feeling that the system will catch you if something goes wrong. But the system doesn't protect you. It only shows you how to stay in the game. When the market shifts, when demand drops or costs rise, the sense of control disappears quickly. It becomes clear that being able to change settings is not the same as being able to change outcomes. Airbnb isn't lying. It's teaching people to confuse interface control with risk control. And as long as that confusion holds, the platform gets exactly what it needs. Active participants who feel like they're in control, even when the real leverage has already slipped away. At a certain point, it becomes clear that Airbnb can't be accurately described as rent, tourism, or housing. And that's exactly why it always feels chaotic. Airbnb exists between two different markets and fully belongs to neither of them. It's not truly part of the housing market, because it carries no responsibility for long-term housing availability. And it's not a traditional tourism business, because it doesn't own infrastructure the way hotels do. It operates in the gap between these systems, and that gap is where all the side effects come from. When housing shifts into short-term rentals, it disappears from the local market, even though no one technically took it. When tourist numbers grow, city infrastructure gets overloaded, but Airbnb isn't responsible for roads, transit, or hospitals. The result is a situation where every individual decision looks rational, but the overall outcome looks dysfunctional. Property owners respond to prices. Tourists respond to availability. Cities respond with delays. And Airbnb simply coordinates the movement between those reactions. This is the key point. Airbnb doesn't break the system directly. It does something more subtle. It removes friction between two markets that were once kept separate. Housing used to be slow and stable. Tourism was cyclical and seasonal. Airbnb merged them into a single flow. In that flow, housing starts behaving like a service, and services start behaving like financial assets. That's why everything feels unstable. That's why prices can rise even when incomes don't. That's why it feels like no one is in control, even though everyone is following the rules. Airbnb doesn't need centralized control because the system self-regulates through demand signals and short-term incentives. And once you see it this way, it becomes clear why debates around Airbnb always hit a dead end. You can't fix it by changing individual behavior. It operates at the structural level. And as long as that structure exists, the outcomes will repeat, regardless of who is renting out property or which city it happens in. Airbnb doesn't break the system. It connects two systems that were never meant to work together. Housing becomes a service. Instability becomes normal. This isn't about renting, it's about structure.